Yo, good morning, StockTwits crew. Happy Tuesday, and welcome back to another episode of the Daily Rip. Hope everybody's having a good morning so far. Markets are moving again. Yesterday morning we were moving up, and now we're moving down. So, lots to talk about this morning. We're gonna get all into it and get prepared for the day. But Shy, how we feeling?
Yeah, I mean, clearly the market's doing some profit taking ahead of tomorrow's CPI and Powell speaking in 1 hour in front of the Senate. So I think it's just slight profit taking. It really is. We're not even. And also, I think it was also some of the executive orders that Trump signed yesterday after the market that maybe are just like ruffling a few feathers. But either way, this is the 2025 landscape we're part of. It's going to be whoop, whoop, whoop. It's going to be very choppy.
Yeah, I feel like even lately too. Like, I mean, we've been choppy this whole year, but specifically this last 2 weeks has been extra choppy. So, really
Mhm.
got to know what you're doing in that range, or else you can get wrecked. So, let's hop into the daily rip. Let's prepare for the day. Get ready for everything coming up for the morning. Here's the heat map from yesterday. Decent amount of green in the tech sector, so looking good there from yesterday. Obviously, all of that is not looking as hot today. But one name that isn't doing so hot lately is Tesla, making pretty nice lows in that range. Still kind of holding that consolidation pullback it has, and it's not necessarily like as aggressive selling on some of the other names I've seen, but definitely some decent downside lately. So keeping an eye on that. You see a lot of red in the banks, insurance area, financial, the capital markets, all that is not doing very good. So keeping an eye on that, but everything else green and looking solid, except obviously this morning things are a little bit different. So we're gonna see how today goes. But anything standing out to you, Shy, from the heat map?
Nvidia, perfect balance on their 200-day moving average. Final, so it was a great ad. Had a feeling if it wants to bounce clear that 125 level, we would probably run up into their prints on momentum and semiconductors. Like they had their day. Look at Broadcom, AMD, Qualcomm, even Intel joined the party. So semis and tech were the place to be yesterday. Like Palantir up 5%. Like they just keep hitting new all-time highs ever since their dominant earnings a week ago. I do think, and also CrowdStrike is, I think, at all-time highs as well. Like it's tech is where you want to be, and energy showed some outperformance yesterday as well. So I do think that yesterday clearly from that's why I love these like heat maps. You can see what worked. Tech, semis, energy, financials were not where you wanted it to be. Boom. And Tesla, I think Tesla might be some FUD narrative on like the OpenAI bid that Elon mentioned yesterday. So like whenever there's even if it was Elon backed, there's might be some dilution on his position in Tesla if he's trying to make a major play of like a 90+ billion dollar acquisition, equity acquisition. So I don't know. I think it's just noise, but something curious to watch. Like 350 is a huge level for Tesla, and it looked like it bounced from there. So see if it maintains.
So far, we'll see. Good Monday for earnings, starting with the work management software company Monday.com reported fourth quarter revenue growth of 32% year over year and revised its 2025 revenue forecast enough to top consensus estimates. Adjusted earnings were also up 66% year over year at $1.08 per share, well ahead of the 79-cent analysts expected. Management said its AI enterprise service management product is now out of beta testing and available to all customers, teasing AI agents that will be launching in March. So, something to watch out for there. The company is the latest beneficiary of the recent AI rotation trade, where lower cost AI like China's DeepSeek has shifted the focus away from hardware like servers and semiconductors and onto software. StockTwits sentiment was extremely bullish after today's 26% rally, but respondents to our poll were less confident. Roughly half of respondents view the stock as overvalued and likely want to see more from the AI story before investing. So, interesting stuff on Monday.com. Do you have any thoughts on what was said there, Shy? Because I know you were you were talking about Monday.com yesterday.
I don't know. I think I wrote this to my subscribers yesterday, and I think it's kind of ringing true. I could be wrong in this, and the reason I could be wrong is clearly it went up 30%. But I do think that it's not CRMs are going to get disrupted in the future AI landscape. Like once AI agents like gain even more momentum, like CRMs will be that niche that will get disrupted. Same with a lot of DevOps tools. But Monday.com, that earnings yesterday, it was a good, not great. Does not deserve a 30% jump. It's not like, for example, Palantir, which in my opinion cement themselves as the operating system of AI, the intelligence backbone of the next gen AI infrastructure, or Cloudflare, which is going to prove that they're going to be the gatekeeper of the modern internet with their workers AI. Like Monday.com earnings yesterday did not justify any kind of re-rating on the stock, but you would think it did, being up 30%. So I'm not bullish on this name, and that earnings proved nothing to me that it should get re-rated.
Yeah, I'm with you. Shy, did the slides disappear for you?
No, it's still there for me.
I need to reload then because something's wrong with my system. So I'll be right back. You start on the next section. I'll be right back. I guess I gotta reload this.
Yeah, so the next section is McDonald's. Revenue miss driven by the worst U.S. sales drop since the pandemic. Revenue of 6.4 bill missed the estimates of 6.44 billion, but EPS was in line. I mean, same stores growth rose 0.4%, but U.S. figures fell 1.4%. Although traffic was slightly positive, customers spent less than usual. I do think this is an indication of lower classes just not doing well in this inflation environment. I think like McDonald's has to do something different. They did also have an E. coli breakout.
That was a minute ago, huh?
Yeah. So like maybe that's just like, ooh, if it's fast food and there's an E. coli breakout, not a good combo. But I don't know. They caught some like they need to leverage TikTok more. Do the Gen Z alpha demo
You
of
see
like
a lot of
partnerships.
you see a lot of companies doing that too.
They need to
Gosh,
keep doing that.
absolutely.
Like Air One does that, which I know Air One's very specific and it's a totally different demo of what
The same rules
McDonald's
apply
is.
though. Same
Yeah.
rules apply. I mean,
Like they used to do Travis Scott collabs all the time, McDonald's. Like do stuff like that, incentivize like the younger demos to come into the store just to do some TikTok content. Like it's so easy. I don't know why they're not doing it. It really is. And yeah, that's what I would be suggesting if I was in the corporate strategy room.
yeah, I'm with you. Reminder for the audience: you guys can now get AI summaries on all the earnings on StockTwits. So make sure you guys are checking that out. And yeah, I mean, go get the AI analysis. It's nice. You don't have to. Here it is, right here. You guys can see. Because I know how it is. A lot of the time, you're, on multiple earnings calls, and you're not able to like obviously listen to all of them. Sometimes you're busy and you miss stuff. So it's nice to be able to go back, see, the bullish stuff, the bearish ideas, and everything here. So it's just nice to have an analysis. I know I use those types of tools all the time because I do not have time to listen to all these earnings calls all the time. So it's nice to go back, get a quick summary of everything, and not have to spend, an hour listening to a call and taking notes. You can just come to StockTwits and get your notes right here. So shout out to that. Love to see that.
I mean, I don't know about you, but I love wasting my time, so I'm probably not going to do that.
Shy. Elon Musk makes unsolicited offer to buy OpenAI. According to reports from CNBC, SoftBank is planning to invest $40 billion in Sam Altman's OpenAI at a valuation of $260 billion. Interestingly enough, an Elon Musk-led group made a $97.4 billion unsolicited bid for the company, raising the stakes in his battle against Altman. It complicates Altman's plans to convert OpenAI to a for-profit company and spend up to $500 billion on an AI infrastructure through a joint venture called Stargate. And then you have the StockTwits post, the Super Bowl equals boring and Elon versus Sam equals priceless. I agree. That game was, I don't know. I guess it was enjoyable because the Eagles won, right? Right, Shy?
Yeah, at least
Other
we didn't
than
see.
that, I wasn't a great game in my opinion, but hey. But yeah, any thoughts on this with the OpenAI and Elon and Altman going back and forth with each other?
Yeah, I'm wondering what Elon's grand plan is because this isn't that. So this is clearly a pawn. He's setting.
I feel like he's just playing around. You know him. He's a
Yeah,
jokester. I mean, he's probably just screwing with everybody, to be
but
honest. But
he's making Sam look like a fool, in my opinion. Like saying, like Sam calling, telling. He went on TV, I think, this morning saying that Elon Musk isn't a happy person. I think he operates from a place of insecurity. and has little policy influence. I'm like, all right, Sam, like, what did you do to justify taking down the goat of Elon? Like, you're the epitome of insecurity. Just look at you. Look at the way you speak. Like it. What are you talking about? Your golden product is essentially a commodity. Sorry, ChatGPT is a commodity. You haven't sold AGI. I don't know if you ever will. Elon has literally done so much for the world on Starlink, Tesla, SpaceX. Like it is Neuralink. Like, and this little kid, Sammy boy,
Sammy
is
boy.
is barking up the wrong tree on saying that Elon's talking from a place of insecurity,
Well,
bro.
like you
Like,
said, the way he says that, I mean, what that tells me, like, you got no other jabs, but you gotta now try and jab at his emotions. It's like,
yeah,
bro,
100%. Now I'm getting some like glimpse into his childhood and why his sister
right?
hates him so much.
Right.
Like that was like probably the comebacks that he did to his sister. Like you're coming from a place of insecurity, and like, "Ugh, Sam, grow
You're
up.
probably so unhappy. Okay, bro. Okay.
Mom,
Yeah.
Dad, look what she said to me. Yeah,
Yeah.
it's
No,
just like it's
that's
just I don't
hilarious to
know.
me. Yeah, that screams what's actually going on with Sam Altman, in my opinion. So let him go back and forth. I love to see it. I think it's great stuff. It's always fun to watch. Economic data for today, you're going to want to watch out because we got plenty of Fed speakers. You got Fed Powell testifying at 10 o'clock Eastern. You got WASDE report at 12, Fed Bowman speaking, Fed Williams speech, all later today. So get those times marked down and make sure you're aware of them because if you're day trading, you're probably going to see some volatility throughout those times, I would anticipate. But yeah, then we got pre-market earnings, Shopify, Coca-Cola, OGI, BP, Marriott International, Humana, and DuPont, DuPont, all going off right now. After hours today, we got SMCI. That's going to be a big one. UPST, Lyft, Hive Digital Tech, DoorDash, and Zillow. So plenty of earnings calls to listen in on tonight and this morning. Make sure you guys are checking those out on the StockTwits platform. And again, those AI summaries, man, take advantage. Those are useful. Any earnings that are standing out to you, Shy? I know SMCI is obviously going to be interesting. I was looking at the IV though yesterday, and then the implied move. I think the implied move is 12%. Given the IV on even the shortest dated contracts, I think you see a complete IV crush, or even if we get a directional move, you better have had in the money contracts because I don't think they're going to do much personally, but I guess we'll see. But I'm curious on your thoughts.
Yeah, I mean, I think I've been very vocal for a while that SMCI is a commodity. What they offer, it's not really a moat or an advantage. And the clear telling sign on that is just look at their gross margins, how they've been the past year or so. It's been compressing, and they're not just compressing in isolation. Like I do believe it reflects a deeper structural issue in their business model, and I do believe that like the prolonged downturn of their margins is just more than a cyclical headwind. I do think it's competitive vulnerabilities that's occurring. Foxconn is kind of gaining some ground in that AI server production. I do think that HPE and Dell is becoming more of a competitive headwind for them. And not even just that, like Nvidia, which is SMCI's like most critical partner, it is diversifying its manufacturing relationship. So like I think, and also this is all the business side, the ethics side. Who knows if their numbers are accurate? So like I'm seeing their margins are compressing and the fundamentals are looking worrisome. That was before uh, they got flagged for financial engineering or something sketchy happening in the numbers. So like it's a bad combo. I think you trade that stock. Maybe it has a strong has a re-rating that occurs from today's print. I don't know, but I'm not that much of a trader. I'm a long-term investor, 5+ years out, and SMCI does not pass any of my sniff tests. So, and Upstart's a trade as well. It's a cyclical trade based on rates, flow, like volume of loans. I do believe that if consumers are stretched and they're relying on credit card debt, I Upstart might be in trouble because they kind of capitalize on the lower quality of credit applicants. Lyft, Uber had a weak guide. I don't know how much that affects Lyft. I don't think Lyft's eating into Uber's market share at all. So might be might symbolize like Lyft is going to probably have a near-term headwind as well. DoorDash is a really surprising business model. It is fundamentally really great, but again, it's the same kind of environment as Uber and Lyft, and like Uber had a weak guide. So either way, Shopify. I have to listen to the conference call, but looking into the numbers, it was a okay print, and it was priced for perfection. I think it was down 8% at one point. Looks like it
Yeah, it
recovered, but
wasn't a bad print, but it wasn't amazing either. It was kind of
no,
just
yeah.
right in
So
line.
it's just it's exactly what happened at Stereo Lab. Like Stereo Lab reported yesterday after the market, phenomenal earning. That was a phenomenal earnings. They're down 5% this pre-market. Price for
So, Shy,
perfection.
when you see that, like when you see an earnings with a beautiful report and then down crazy, is that buying opportunity to you most of the time?
Not in the near term because, like for Stereo Labs, for example, like it was trading at 90 times earnings entering the print, even though they're growing the top line like 130% with like 40% bottom line margins. I think the worry is always the unit ship. It's slowing down. It's stabilizing a bit, even though it's like 130%. It went from 180, and like it's just it's tricky, especially when Stereo Labs is their their secret sauce is Scorpion, which is competing essentially against what Nvidia has to offer. So it's a David versus Goliath in a way. And if it's priced for perfection and their secret sauce is something going up against an Nvidia, like I think that their risk and return isn't that great right now. I might be I built an overweight position at $80 on Astera Labs because that was the anchored after VWAP from their IPO. So like now I'm like I'll buy at that level. I'm not in any rush. It ran up a lot. It's a new IPO, but to answer your question, long-winded answer of like no. I think when something's priced fairly, it might consolidate a bit um, after an earnings drop of like 5%, and maybe the next leg occurs. But I'm never in an urgency to add.
Yeah, I get you. Let's take a look at some charts. CLF bullish trendline break for Cleveland Cliffs. So this is getting some momentum lately. I haven't checked this out on my charts at all. A little bit of a cheaper stock, but coming from that $9 there, 8.99, we made that low. Started, going from lower highs, lower lows to things went sideways a little bit. Started basing, and now you're actually getting some momentum back to the upside, right? Breaking that lower high trend line. So market structure is trying to change here. I do like the momentum we saw from that previous day. That candle closed really strong on the breakout. That's what you want to see, right? You don't want to see a candle start out really strong on the daily and then end up closing like with a big top wick, right? Rejecting that trend line. Instead, you're seeing nice momentum. I would anticipate some sort of retest of that, $11 area before we go higher. But I think this looks pretty solid so far. Obviously, just with cheaper names like this and, you know, names that aren't as big, you got to be a little more careful. But when the momentum's there, especially if you're playing short term, I think it could be some great opportunities. So something to keep an eye on. Shai, you got any thoughts on this one?
Might as well ask me what I think about how the next frontier after space economy. I don't know. I just this is not my lane at all. I feel like yeah, if whatever I say, you guys should just ignore on
Yeah,
this topic. I am not about oil commodities.
that's okay. That's okay. Let's see what else we got. Rocket Lab. This is
Mm,
this is right up your alley. Well,
yeah.
it's okay. You don't like oil because yeah, I know you like Rocket Lab. High and tight flag. So this has been obviously huge bullish trend. Things have been really strong to the upside, right? Every bit of selling you've seen has just been actual consolidation to the sideways or to the side, right? Before we go higher, and you're seeing the same thing here after impulsive moves up. So I think until you get a real break of structure to the downside, I don't see a single thing to worry about here. Obviously, you could get some short-term pullbacks, but if you're holding long as the structure is bullish and we're making higher lows, I think this is just fine, and you're primed for another breakout here soon, another leg up. But Shai, what are your thoughts? I know you're more of a long-term investor on Rocket Lab. We've ran up a lot. There's been some great gains made on Rocket Lab over a little while. I'm curious on your thoughts.
Yeah, I mean, this is another example of a stock getting re-rated, but justified re-rating, not like a Monday.com. I think if you guys don't know what Rocket Lab does, essentially it's the end-to-end space prime. Just think the space logistics company of the future, like aka the FedEx of space, you can call it. So once Trump won the presidency, like space economy is in a way a Trump trade because read between the lines, Elon Musk is the first buddy. He has Starlink and SpaceX. Do believe there's gonna be billions of infrastructure dollars being placed towards like space infrastructure spend. Like there will be just because it benefits Elon substantially. It's gonna be a high tide raises all boats for the whole space economy stock. If there's billions being spent on infrastructure, who's gonna be the biggest beneficiary on the stock market right now? Rocket Lab as the FedEx of space. So I think that's why they're catching a bid since November. Like the re-rating occurred before the election because it was market was finally seeing them not as just a former space SPAC or just a satellite launching company. Like they were becoming this full end-to-end space prime. Just look at their services side of the business. It is dominating, and that is a high margin business. So I do believe that this like they're in a consolidation period. So like when you go from $4 last summer to was it $30 now? That's in like less than 9 months. You'll consolidate from there. You don't want it to keep going up and up. That's what bubbles are formed. So now, like I think, it consolidates. Let the business execution speak for itself. Let the fundamentals kind of come closer to reasonable, and that's fine. But that's a perfect example. Like if you're feeling about it, you got in late. You got in above 20 probably, which is fine long term. But there might be some near term turbulence, and that's why it's so important that you kind of do the research and gain that conviction before the FOMO behavior kicks in. Like Rock Lab was stuck between $4 to $5 for 2 years. There was plenty of opportunity if you did the research, dug into the company, that they weren't just a satellite launching company, full end space prime. You could have built an overweight position for 2 years casually, like a normal DCA plan every 2 weeks. Just put a certain percentage in and just let it sit. Opportunity cost sucked, fine, but the stock 10x in 6 months, it made up for it. So that's my 2 cents on Rocket Lab. I think it's a great company, but stock might not be going anywhere until we get some kind of infrastructure initiative from Trump.
It seems like right when we hit that $30, that's when like things just went real sideways. So
Yeah.
I would mark $30 on the chart and wait a while maybe. But let's see what else we got. What other charts we have for the morning? Baba gap and go. I've heard some talk about Baba lately. Definitely getting some momentum over that $100. Big psychological level clearing through that. So, I mean, I love seeing that. Obviously, seeing a run through a psychological level like that is a big deal, right? Because majority of the time, if you're coming up to $100, you're gonna expect rejection immediately, and you kind of saw that. But rather than hard rejection, you actually see a break of that level and then consolidation around that level, right? When I'm looking at a key level on any chart, you know, if I'm looking for it to respect that level, I want to see aggression right when we get into that area, right? Versus this, you're actually, if anything, you're seeing aggression to the other side, right? You're not seeing aggressive selling right when you hit that. Even though like the first day rejected it a bit, but the fact is this the next day we go right back up to that level, and the market's telling us, hey, like we want to trade here, right? If that was truly a big level of rejection, I think we would have traded there one day. Maybe the second day, even if we did trade there, we would have rejected hard and went down after that. And you see this thing just holding price, consolidating sideways until finally gets the momentum to break over that and move into that 110, 111 area. So love to see it. I think this thing can absolutely go back to that 117. If you keep momentum over this 110, that's another $7 to capitalize on. So some great moves for Baba. What are your thoughts, Shy?
I mean, I first off caveat. I think China's stocks are uninvestable. Maybe trade them. I do believe that Alibaba had some recent like catalyst news. They're like 10% investment in DeepSeek. There's some rumors about that. It's funny because now Apple announced this morning they're partnering up with Alibaba to bring AI features to iPhone users in China. So like Alibaba's kind of capitalizing on an AI narrative now, and that's where you're seeing in the stock price where it's it's a dominant company. It's a dominant business, but it's a tricky investment in a way. So like e-commerce business, like it's not as juicy as they have a lot of different segments of their business, not just e-commerce, but like they're known for their e-commerce. But they're capitalized on AI right now, and you're seeing a lot of news flow backing that up. And there is an AI premium that the market assigns you if you prove that you have an AI tailwind. There is. That's exactly why a lot of the not C-suite, but like a lot of the companies try to pitch an AI narrative because they see that the market assigns an AI premium to you, and that's what you're seeing right now in Alibaba. It looks great technically, chart wise, but just look at the historicals. Like it's always just back down. Like it's just an uninvestable stock, great trading ass vehicle, but like long term, like I don't know about Alibaba. It'll always look cheap because it's uninvestable because China could just overnight do something that's gonna pop the bubble and make Alibaba stuck in the mud. And Jack Ma disappearing for whoever knows how long. You can't invest in a company like it's just tricky. You just don't. It's a weird environment. The
Yeah, I'm with
East.
you. I ain't investing in this. I'll trade it though. Happily, I'll trade it when there's momentum, but I ain't buying shares of this stock. That's for sure. So I am with you. C3 AI wedge breakout. This is trying to get some momentum as well. Not a company I love, but of course could be a short-term trading vehicle, and it's trying to get some momentum here. I don't know. It doesn't look amazing to me. I think this, you really need momentum to continue here over these highs, or else I kind of just think this is a fake out, back to the downside, back to that 2850 area, the way this is looking. But if you get momentum continuing and you break, those highs with real aggression, I think this looks all right. But just not a name I trade much, not a name I really like. But obviously there can be some short-term opportunity, and if you do get going, pretty bullish off these lows here, I would anticipate a retest of that 42 area. But just not a great ticker for me. Shy, I know you don't like C3 AI, but what are your thoughts on this chart?
I mean, from this chart, I think they capitalized on the
It's
AI
trying.
narrative. They were just putting that bucket, that oh AI, so like it's gonna go up with all the AI stocks. I think there's a reason it's kind of coming back down. It's not a Palantir, Cloudflare, Snowflake type of like AI play. It's more of a there may be an angle for them in the agentic AI world, maybe, but there's so many red flags. And when I dig into this company, that it does not pass my sniff test, and I just think that it's not a real AI beneficiary. I could be wrong. It's just I'm flagging a lot of like, that's fluffy language, or oh, that's misleading. Oh, like why would you say that when this is showing this? They're like manipulating the narrative. Like I just saw a lot of that when I dug into the company, and I put in the bucket of doghouse. Like you just don't pass my sniff
Well, it's
test, and
just
I could be
like,
wrong.
are there better opportunities? And there are. So,
100%.
so I'd rather put my focus somewhere else for the most part. MVO potential value buy on Novo Nordisk. So interesting here. This is down pretty heavy on the year, 30% already. Looking nasty, but might be providing a buying opportunity here. Not a name I look at very often, but Shai, do you have any thoughts on Novo Nordisk and at these levels? I mean, we're getting kind of killed here into the year, down 30%. I know there was another name down 30% last year that I was buying up. Her name was Tesla. She ended up flipping green. But I don't know if I expect that for Novo Nordisk. What are your thoughts?
I mean, they've run up last year, and they run up on GLP-1 or the Ozempic type of narrative. Ozempic's looking more and more like a commodity as well. GLP-1 is looking like first mover advantage. They benefit off of it already. They squeeze that juice. So now, what's the next leg? I think that's what the market's kind of looking for. And I also do think European stocks are getting bashed a bit. Like look at ASML as well. So like Novo and ASML are like the two of the biggest European stocks out there, and they're both suffering a bit. So I do think that no, I mean I don't know the space too much, but I think GLP-1 was the catalyst for them, and it's not that much of a catalyst anymore right now because it's becoming widely more of a commodity of a product.
Yeah, good stuff. Well, we got an exciting back half of the show planned for everybody. We got Austin Hankwitz coming on. I think he's all ready to go. So let's get him on and talk some charts, talk the market, get ready for the week. Austin, my man, there you are. How we doing, brother? Ooh, there's the bell. Let's go, baby. Let's go, baby. How we doing, my man?
Gentlemen, how's it going?
Oh, just a great morning as always. Things are well. Market's down a bit. We're got a lot of economic data to look forward to. So, just curious on your thoughts. I know we got a little list of things to go through, but how we feeling about this market, man? It's been a crazy few weeks.
It has been a crazy few weeks. Well, I wore my blue shirt today, because I wasn't sure if it's gonna be green or red, so I was like, blue somewhere in the middle.
Yes, mix and match.
General market thoughts right now. I'm leaning toward we are in a bull market. I don't think things are bearish enough yet to take that off the table. And I continue to buy the weakness that is, you know, trade war, tariffs, anything, along those lines. And then more specifically, this idea of like less is more. I think in 2025, a lot of people, we saw two awesome green years, right? We saw 20%, I think it was about 28% in 23, another 24, 25% in 2024 there. And I think a lot of these people are like, cool, where's the easy money? Where's my next 30, 40, 50, 80, 100% trade? And they overtrade and they end up, performing worse than they would have if they just kind of sat on their hands. And so I'm trying to lean into this ideology of like less is more right now, where have a couple big ideas, have a couple, strong convictions in your own portfolio and ride the wave. That's what I've continued to do this year. It's what I plan to do for the rest of the year. And I'm excited, but I'm curious, what do you guys think about the markets right now? Obviously, we're heading into seasonality, which is, well, seasonally a weaker than the normal February, right? I think the post-election years say that February on average is negative 1.3, 1.4%. Are you guys positioned differently as we head into the new month?
I mean, I'm keeping seasonality in mind. It doesn't make decisions for me, but I definitely keep it in mind because, I mean, it's seasonality, right? If we're catching that mode, I want to be running with that. But at the end of the day, I've really been taking things just day by day lately. A lot less swing trading, a lot more day trading.
Yeah, yeah.
Given the market, I mean, it's just been so back and forth. At least it's been back and forth in a daily range on the futures. At least it's like 1,000 points, so it's plenty of range to play with. But it's just, we get to the lows, it's play the bounce levels, and when we get to the highs, it's time to short, right? It's just back and forth. So I think until we get a real move, real break of structure outside of this consolidation, I can't really be super high time frame bias. You know what I mean? And
Hmm.
if I have to choose, I'm going to choose bullish because that's what the trend has been. That's what we're
Right.
consolidating out of, right? Is a bullish trend. So I have to think that way, but I won't lie. I mean, majority of the money I've made this year so far has been on the short side, right? So I've been playing a lot more shorts. I could probably count the amount of times I've went long on one hand, to be honest. So
Oh,
a
wow.
lot less
That's
longs,
impressive.
but still plenty of opportunity for both sides, right? And I see that continuing as long as we're in this range. So I'm just gonna kind of keep my day trader hat on for now. But I want to see some more swing setups, and it's not that you can't catch swing setups right now. I think it's just shorter term, and it's a lot tougher. And so I'm trying to kind of focus on where I'm stronger right now, and that's definitely in the day trading area.
Yeah,
But
it's definitely harder. I would agree. And
yeah.
then Shy, as we consolidate now, going on pretty much 2 months now of like pretty consistent consolidation, call it plus or minus, 2, 3, 4% off of the highs. Have there been any like just major moves that you've made in your own portfolio? Have you taken advantage of this consolidation?
Well, I do believe like the consolidation you're talking about is more on the indices. If you look under the hood, there is a
That's true. That is true.
repositioning that occurred from big tech into software. I think software is running hard. You're seeing Palantir up 50% this year, Cloudflare's up 60%, Snowflake, MongoDB, they're all up 25% this year. Like I do believe there is a repositioning. So and the big tech earnings kind of validated that a bit where it's not big tech's gonna be fine, but it's not the place you want you to park your money in
Yeah.
2025. They're treating this year as a full-on investment year. CapEx spend is exceeding expectations.
Hmm.
There's FX headwind issues for them that's affecting their top line and earnings. There's some energy and compute constraint on their AI side of their business. Like it's just a bad jumbo of combination for big tech right now that looks like it's dead money in a bit for maybe next 6 months when software they just showed last earnings cycle. That's where you kind of want to be. The Gen AI project flow is finally coming through. The workloads are finally affecting the software names, and you're seeing the reactions. Like Palantir last week, dominant earnings. Cloudflare is up 30% since their print. Monday.com meh earnings on yesterday, up 26% off that
Oh
print.
yeah.
Like
Oh
the
yeah.
appetite's there. So I do believe it's every year. Everyone always says like, oh, it's a stock pickers market this year. I do believe this year it's actually going to be that. You're going to see the indices maybe up 5-6% this year, but you're going to see a lot of massive moves on a lot of the mid cap growth and a lot of the high quality small cap growth.
I 100% agree. Well, fellas, every time I come on this awesome program that you guys host here, I gotta bring the heat. So I got three wonderful call outs for everyone listening right now that I'd love to lean in on. I alluded to it by that first question around seasonality. I got a fun fact to share. When the S&P 500 experiences a January with at least a 2% return like we had this year, the S&P I think was up 2.9, 2.95, something like that. The index delivers a median annual return of 19.3% with an 88% chance of just being in the green at all throughout the year. I like those odds. I personally do not think we're going to have another 20% year this year. I would agree with Shy that we're going to see mid to high single digits. I think we will also see multiple double-digit pullbacks. We talked about that about 6 weeks ago when I was on here first. I was alluding to volatility being a major theme for 2025, and that's certainly been the case. But I like the odds. I like the odds of a strong green 2025, and the seasonality is pointing to that. Now, speaking of seasonality, like I said earlier, February tends to be the worst the worst month of the year post-election cycles, right? So this is our first year post-election cycle. We got Donald Trump now back in office, and the February is shaping up to be some, a little bit of volatility, but on average, it's a negative 1.3% return. It is the worst month of the year there. But to Shai's point, we've seen some positive earnings that have helped us kind of, move along the way here. Aggregate Q4 profits have grown 12% year over year versus 8% growth with consensus there, which means that we're on pace for the biggest quarter of year over year EPS growth since Q1 of 2022. That's pretty exciting. So all in all, I think this year's off to a great start. With that being said, I continue to expect the volatility. I continue to expect those multiple double-digit pullbacks in the indices. Corrections are going to be our friends this year. We're going to leverage those opportunities, to Shai's point, to open and expand our existing positions in these software names, AI names that we're very much excited about. Speaking of AI software, Shai, want to just like hype you up, my friend. I don't. You were probably like one of like maybe a handful of people I've known since early 23, 22, 21 that have been talking about Cloudflare, right? And
Hmm.
Cloudflare, their stock fell off the table back in 2022. Rates were climbing. I mean, no one wanted unprofitable software names here. And Cloudflare, dude, I'm up 172% on my
Let's
Cloudflare.
That's
go.
awesome.
I've
Let's
got
go.
my average cost is in like mid to high 50s here per share. We're at 170. It's amazing, right? So three reasons why I'm buying at 170 a share. Reason number one, their total remaining performance obligation, right? It's essentially like future revenue is how you guys can think about this, right? But these remaining performance obligations are up 35% year over year, which is outpacing the revenue of 27% for the quarter. So if you've got future revenue climbing quickly and it's climbing faster than your current revenue that you're realizing, that is a very positive theme to look forward to when it comes to continued growth down the pipeline there. So First reason that was the RPOs there. Second reason, management told Wall Street they've experienced a measurable improvement in the macro environment. Specifically, they saw a notable uptick in close rates and an improvement in sales cycles. Love that. Love improvements, right? We love improvements. And the third reason why I'm buying at these levels is the company they had mentioned sort of this like DeepSeek and sort of analogy, right? But they were essentially saying like the optimization techniques on their platform, using DeepSeek as like an analogy here continues, and they believe that they'll be well positioned in inference, and it's hard to say when that's going to be, but Wall Street thinks within the next 12 to 18 months, you're going to see a material uptick in AI specific revenue for Cloudflare, and I'm excited for it. So I'm buying at these levels. I'm continually dollar cost averaging into Cloudflare. I think it's a wonderful name, just like Shay does as well. And it's going to be a big year for Cloudflare. Shay, did you have any, maybe one or two big, exciting call outs from their earnings that just like stick with you in your core?
Yeah, I mean, first, I appreciate Austin the kind words. I know Cloudflare. My average cost basis is like around $50. It's probably
Yeah.
the most quiet multi-bagger I've ever had.
Yeah.
Where valuation prevented me from having it more than a 2% position when I was at $50. So now it's even right now it's only 5%. But back then I was like, oh, the edge in the post agentic AI world, edge computing is going to be a necessity. And once Workers AI, their new AI product, got revealed, I was like, this is going to be a game changer. Like this could be the AWS of the new modern internet. How AWS was that much of a power force during the cloud days. So that's why I always call Cloudflare the gatekeeper of the new modern internet because of Workers AI. And Workers AI essentially it allows developers, which there's gonna be so many developers out there on because of AI agents, to run AI inference at the edge. So what that means is instead of relying on like the centralized cloud data centers like the AWS's and the Azures or
Yep.
Google
Yep.
Cloud, the AI models can process data closer to the user. So that means faster and more efficient, no lag, no latency in the data. Like that's going to be essential. Not just the LLMs infusing the high quality data into the LLMs, like the latency of it from model to user is just as important. That's what Workers AI is essentially going to solve, and I believe you're seeing the adoption pick up last earnings report where they had a record 16,000 new customers last quarter alone.
Yep.
That's
Yep.
essentially, I think they had 30,000 for the whole year before that. So it's ramping up significantly. And you're seeing enterprises adopt it, where I think it was like 170 or 175 customers now spend over $1 million on Cloudflare. That's a 47% uptick. So momentum is there. And I think Cloudflare specifically got re-rated. This most recent earnings print of like you saw Palantir got re-rated a couple quarters ago. You're seeing Tesla somewhat get re-rated because of autonomy and FSD. These re-ratings are massive if you prove that you'll belong in the stage 2 of AI, where AI is
Hmm.
not going to cannibalize you. You're going to actually survive and thrive and have unprecedented pricing power. The market's going to reward you with a stupid premium. Cloudflare, I think, officially joined the Palantirs of Tesla as a stage 2 AI winner. And now maybe institutions were offsides like they were with Cloudflare. I'm not with Palantir, and now they just want to accumulate it, and now they have to pay the premium to get that exposure.
Yeah, man, I'm right there with you. I really want to just emphasize what you said there about sort of the 47% uptick with those customers that are paying, $1 million a year, talking about how important inference is to their business. Like the hardest part, and we talked about this, you and I have in the past, but it's just on spaces and stuff, but it's cool to talk about it now again, which is like, AI 1.0, Wall Street was like, cool, who's going to benefit the most from everyone wanting this hardware and building out this infrastructure? Oh, it's the hardware stocks, right? It's the Broadcoms, it's
Hmm.
the Nvidias, it's like all these names. And then it's like, cool, let's do that for a year. Let's do that for 2 years. Like, what's going on now? And then you go back and you look around, you take a step back and say, okay, everyone's been buying these hardware, everyone's been reinvesting into this infrastructure and building out this sort of new technology within their business. Who now is like actually doing that to a caliber that is going to generate net new revenue, net new profits, net new margins that weren't there before this infrastructure was created? And I think that's like to your point, like AI 2.0 and like that re-rating, once you're able to demonstrate that to Wall Street, things happen like this, right? Where the stock pops up 30%. I mean, it's up 60% year to date, which is bonkers shit. Okay, I
And it
don't
was
think it's
it was pricey entering this year too. Like,
it was, it was. It's just, it's bonkers, right? And so like I think Monday.com is beginning to do the same thing. So let's talk about that one, right? Two reasons why I'm still excited about Monday.com. They've seen I think a 40% ramp up this year. Sorry, my alarm was going off. Yeah, 40% up 40% year to date. I'm up 180-ish% on the name since early 2023. It's been one of my favorite companies to add to my portfolio. I also interviewed their CFO on an old podcast I did with Morning Brew called After Earnings. So go check that out on YouTube if you want to learn more. Pretty cool. But the company shared, and this goes back to what we were just talking about with like this AI adoption, implementation, technologies, customers, things like that. AI actions in their platform by their customers was 3 million actions in Q3, right? So their customers took 3 million like AI actions in their platforms, 10 million in Q4, right? So like the amount of just use of this new technology, this new product, this new way for their customers to be more efficient inside of their products tripled. It more than tripled throughout that 3 month sort of period of time. And then just in the month of January, 14 million AI actions going on inside of Monday.com. So when you think about like who are the companies that invested hundreds of millions, if not billions of dollars into AI infrastructure so they can build new products and sell to their customers and cross sell between different products and things like that. Monday.com, I think, is at the top of the list. And it's not just about the, hey, I think Meta is an example of this where like Mark Zuckerberg's a big believer in like, if we build good products, they will come. Newsflash, Mark, I've never used your llama thing in Instagram search or whatever. Not inherently, at least. I don't like, poke around and, I'll do X or I'll do Chat GPT or something. But, it's one of those things where, unlike Zuckerberg's Meta, where he thinks that if we build these AI tools, everyone's going to use them, Monday.com built them and they implemented them and integrated them into existing tools, making them way better. And now AI actions that were taken just last month is 5 times as many that were taken in, let's call it September, right? So it's like their customers are adopting it. The technology is there. The cross-selling is going to happen. Their CFO just was quoted saying they're doubling down on AI in 2025, which is really exciting. So that to me is just, I love Monday.com at these levels. I think we might now be back at all-time highs at this 332. No, I take it back. We got to like $400 a share during the COVID bubble. But that was induced by everything that was COVID. This is induced by growth, profitability, and net dollar-based retention rate. It's now been trending higher for 4 consecutive quarters. It bottomed at about 110% in Q4 of 2023. I'd imagine this trend will continue throughout 2025. So yeah, man, I like Monday.com. I think it's been one of those names that I've talked about for a long, long time now, and I'm just glad I've been able to just continually dollar cost average buy this uptrend. And to your point, Shy, I think this AI 2.0 software name, like Monday's one of them.
you're not gonna like this. I think this is the one name we're gonna disagree on.
Really,
I
really.
think so. I think so. I think I could be wrong. Obviously, I could be wrong, and Austin could be right. But I do believe like the market's rewarding Monday.com as if this quarter confirmed an inevitable future of dominance, like a Palantir, a Cloudflare. When in reality, I just don't think that's the case. Like, also correct me if you disagree with me. Obviously, I want to get called out a bit, but like much of the revenue upside when I dug into the report stemmed from price hikes. It really wasn't an organic expansion. Like you mentioned, NRR bottom at 110. Now it sits at 112. I think that's more of a reflection of like adjusted pricing than broadening adoption. Like once that lever loses its impact, where does the growth come from? Because the CRM and workflow category will be one of the seismic shifts that's going to occur once AI automation or agentic AI takes off. So once the AI tsunami occurs, CRM and workflow, that niche will get disrupted. Not all of them are going to die off, but there's going to be 1, 2, maybe 3. It's hard for me to say that Salesforce won't survive that. Maybe Monday.com does as the mid-market play, but HubSpot is also a really interesting play in the SRM space. Like, I think it's such a noisy segment of what AI is going to become that this earnings report was more of like, I think that stock lagged a bit from the past 3 or 4 months from like this software rally, and now it's like catching up a bit. But I don't think that earnings report justified re-rating of like future AI dominance. And I could also be wrong, guys, clearly. But that's just
Dude,
my
I
take
love
on it.
this. No, no, I think this is what the show's all about, is talking through these things. So you don't, I mean, I would argue though that yes, to your point, agentic AI and all these, sort of new technologies are going to disrupt CRMs. It's going to disrupt workflow management tools and everything like that. But I would argue that not only is Monday.com positioned to take advantage of that disruption with their, customer base, they have a wonderful management team, all their products. I mean, they just built their own, CRM tool. I think it was 12 or 18 months ago, and the adoption has been unreal. So I don't know. I think that they are. I think that they're positioning themselves for success to leverage that disruption to take market share. I agree that, the Salesforces and the HubSpots are absolutely going to be there, but I would put them in the same conversations as one of these long-term winners in the space. But I guess we'll have to see.
Yeah, that's the thing. That's the beauty of the market. Like there could be two different takes. Like you can see glass half full. I can see it half empty. We'll see what happens in a couple of years. That's the beauty of the AI landscape as well. Like things are going to change rapidly. Like
Oh
I'm
yeah.
bullish on Snowflake, Palantir, Cloudflare, but you got to check your thesis every quarter. You have to dig into the numbers. Like it's going to change at a rapid pace, and AI agents are just like dipping their toes in the water right now. Like once it becomes scalable and like the momentum occurs, like you're going to see what's going to be a winner, what's going to be a loser, and it's going to happen in a blink of an eye. And that's what you got kind of gotta like what Austin's podcast is like what we do this is daily show. Like you kind of have to stay on top of the latest and greatest because the information is quick. Like
Oh,
it is happening
100%.
so
I mean,
fast.
gosh, you guys remember Chegg in
Oh
Oh
my
college?
yeah.
god.
Oh yeah.
Like that is like the most prime example
Mm-hmm.
of AI can just eat your lunch and now you're screwed. I mean, their stock. I mean, I was thinking about. Gosh, I'm over here on Wall Street Bets back in 2017, 2018. People buying Chegg call options in the $30 a share. It skyrockets to a
Oh my
hundred something
gosh.
during COVID. It's a buck 40 right now,
Yeah. Bye
and that
bye.
is because of AI, right? So it's just like it does happen in a blink of an eye for sure.
No, it's
Mm-hmm.
crazy. I think. I mean, as a trader, as an investor, no matter what, if you're involved in the stock market, you better be able to adapt, right? Like, I mean, sometimes we're in love with the stock, and the next day some news comes out, and we have to kick it to the curb and make some decisions, right? And I feel like there's a lot of people that just like are not okay with that, right? You got to be able to just okay, like my mind has changed, right? And you got to be able to run with that because if you can't adapt, I mean, just look at the market, right, Austin? Look at the market this year versus last year.
I
I
mean,
mean, you've had to adapt or else you're not surviving right now, right? You've kind of been forced to adapt and I love that as a trader because we're forced to kind of be put in different environments constantly and make it work, right? And I just love that. So
and it's also uncomfortable. Like it is
yeah.
uncomfortable. Like going through that like psychological
Well, and
barrier
especially
where
for us, we're all public with what we do, right?
yeah,
So
hundred
it's
percent.
uncomfortable for one just doing it. It's even
What
more uncomfortable having to share it online and like be public about it, right? So like that's another thing to keep in mind.
I mean, 100% because like what I'm saying about Monday.com, like Austin just said it hit an all-time high, and I'm saying I think it's gonna be a bust. Like that's not doesn't make the chart's not backing my narrative up. So I might look like a schmuck. Another one is like I used to love Datadog. I think that's gonna be observability is gonna get disrupted in the agentic AI world. I just do. The chart's not saying anything different. I used to own Datadog a year ago, and now I'm saying this all of a sudden. I'm a long-term investor, but I just think observability, like what they essentially do is make sure the clients don't overspend on the cloud. That's what AI agents are going to prevent. Just create an AI agent that says, "Don't overspend on whatever blah 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 on this cloud." Like I think that's where the future is going to go. So like I'm bearish on Splunk, I'm bearish on Datadog. Like I could be wrong again, but that's what I'm seeing, and the chart's not backing up. So like it's going to be a really interesting time in the market.
Well, I think to your point, Jordan, of admitting those losers and selling them, right? Adobe was that for me in 2024. I think, as was most of the market, pretty bullish on Adobe early 23. You know,
Yeah, I
all of
was
this
as
idea
well.
of
Absolutely.
Photoshop with generative AI and,
We saw those we saw the chat GPT the AI models that would help you like create the photos and stuff. I remember that
yeah,
was
yeah,
going
man.
nuts
It's
and
like
Adobe
there were
was
so
going
many
crazy.
reasons.
Yeah.
Exactly. There were so many reasons to be excited about names like Adobe and how they were going to disrupt with AI imagery and all these cool things. And their stock, it ran in 23 from $350 a share. It didn't, go back to where it was during COVID, which was about 700, but it ran up to about 600. And now it's at 450. They haven't been able to monetize their generative AI with Firefly as they thought, right? A lot of actions are being taken, but no one's actually paying for it, right? So it's just to that point where, and I cut the stock out of my portfolio for a small gain, but it's one of those things where you have to have the humility and I think, it comes back to Chris Camillo was talking about, and shout out to Shai's conversation with Chris about humanoid robots and all that fun stuff whenever we did that massive space, I want to say it was like 2 weeks ago. But Chris, I think is in that, maybe it was on one of his YouTube videos, but he's pretty much saying like every single day that you own a stock, you are actively buying it, right? So it's like every single day that you've got Monday.com or Cloudflare or Snowflake or Palantir or one of these names in your portfolio, you have to think, I am actively buying this stock today, right now, at these valuations, with this most recent update and with this most recent earnings information. So just having that, and then to your point, Jordan, having the humility to sell it and be so public about it, or be so publicly bearish or bullish or whatever it might be. But to Shai's comment, that is the market. That's what's so fun. You put your money where your mouth is, and if we're right, we're right. If we're wrong, we're wrong.
That's the thing. It's a good time, right? And like, it, y- you see retail on Twitter. The majority of traders, they care so much about being right or wrong. I could care less. I know my plan works when I'm day trading. I know my system works, right? At a
Yeah.
certain amount of time, I'll make money. I'm not worried about it, right? But you see a lot of people are so worried about being right or wrong or whatever. And of course, it does suck when you're wrong. But shit, I was wrong about Tesla the other day. I had a long swing
Oh
on,
my God,
and look at Tesla. I was so wrong.
I'm so wrong constantly. Like I'm wrong about
Yeah,
DraftKings. I'm wrong about Hinge.
it's part of the
Apparently, like
game.
I'm all yeah, 100%. That's the beauty of these kind of shows, and like also like Austin's podcast. You can't delete an episode. You can't delete live stuff. Like you
Or
can delete the
spaces,
tweets.
or my
Yeah,
streams, or these streams, or
exactly.
any
So
of it. Yeah.
whatever we say on here, like take with a great like a weight, because like it's what we're saying here is permanence essentially, and it's
Yeah.
not going to be a fleeting moment like a tweet that we can just delete and look like a genius. Because I know a lot of gurus out there, they do a play and then it doesn't work out, deleted. So that's not us.
No, sir.
I'm gonna leave you guys with some homework. I was doing
Let's go.
some just general analysis last night, trying to find the next multi-bagger, and it seems like it's already seen some momentum here in 2024, and as now we head into 2025, it seems pretty flat. But Grinder, Grinder stock, the dating app, take a
Oh,
look.
the literal app.
The literal Grinder
What
dating
does
app.
this stock look like?
I'll let you pull it up here.
Let's see.
But check it out. It's a pretty
Oh,
interesting looking chart.
oh, it's done well.
It has done
I would
well.
not surprise. I would
I
not
found it
expect this
last
from
night. I was
Grinder.
doing a little,
What?
and I was like, "What's going on here?" It's got like a weird wick up. I don't know what that. I don't know what happened there, but yeah, it's just kind of trended higher, up and to the right. Revenue's growing by about, call it 40-ish%,
Let
35,
it cook,
40%.
man.
Profitable, gap profitable. So check it out. I don't know. I haven't done any research into it. I just saw it last night, and I know that people that watch the show love to analyze stocks in real time and find out some cool, fun nuggets. So they're up 108% the last 12 months. They're up 50 something percent in the last 6 months, and they're at $3 billion of market cap. But yeah, check it out. We don't know yet, but I wanted to share it. Maybe you guys can do a little homework yourselves and let me know what you think next time I'm on the show in a couple weeks. Maybe
I'm
we'll
just
do a little
massively
little
surprised
recap
right now.
update.
I'm massively surprised right now on how much this has ran from the lows.
And
It's doing
especially when
well.
you like compare it to, yeah, like isn't Bumble yeah, Bumble
Yeah,
is
well,
down
and it's like these
40% in
dating
its like
apps, I
latest
just don't
time.
ever expect much from them. So to see
Yeah,
something like this is
I know, but
just wild.
exactly.
there is somewhat of an AI tailwind on dating apps. I'm sorry, but there is.
Yeah,
Like they're gonna optimize like the matches
absolutely.
somehow
Yeah.
and stuff like that. So
No, there's room for AI to get into there as well. 100% agree. But yeah, I mean, look at Bumble, and then look at Grinder. The difference is crazy. I wonder what Austin. Do you have any thoughts on behind like what's the difference
I've
here?
done no research.
Okay,
I
yeah.
found it
So that's
last
our
night
homework.
at like 9:30. I was like, I got a list of a bunch of names I had to look up
Oh my
and
gosh.
check out their valuations and all the financials and stuff. And Grinder was on that list, and I saw it and I was like, that's interesting. I'm gonna give some homework to Shy and Jordan tomorrow on the show, and I'll let them check it out as well. But yeah, maybe there's an AI play that we don't know about that Grinder's doing, and who knows? Maybe this could be the year for Grinder, 2025, the year for Grinder stock. As
You
if
never know.
2024 wasn't already, right?
Yeah, right. Right. Yeah. You never know. Well, Austin, always appreciate you coming on the show, man. It's a pleasure.
Thanks
And
so
I'm
much,
sure the
guys.
audience appreciates it, and we'll have you on soon, I'm sure. So
Cool. Sounds
appreciate
good.
you. To the audience, appreciate you guys as always. Make sure you guys are liking and subscribing on the Stock Twits channel. We're here every day. So meet us tomorrow for another episode, and we'll see you guys then. Enjoy the trading day.
I was gonna make a joke
Let's
like
go.
Jordan. We should do some anecdotal evidence on Grinder.
Dude, I was about to make some jokes, but I held off. I held off. Yeah. I was like, I shouldn't say that. No, funny stuff. Yeah.